Nuckman right now. And Alan, I want to throw that out there to you. There's this talk that the Swiss National Bank, other authorities are talking and dealing right now with Credit Suisse to stabilize things. That was enough to send us off our lows. The Dow had been off well over 700 points. We finished down only 280. But what do you make of that?
Well, I'm strictly a price guy. I'm not paid to think, I'm paid to trade, and I trade what I see. And what I see is we're down less than 0.5% in the S&P. We're essentially where we were on Thursday afternoon when this whole thing started. So the market hasn't had a catastrophic reaction. We've got the VIX at 27, so there's not much fear in the market. Yeah, psychologically, people are very focused on this, but unfortunately, people mentally are always fighting the last war, the last battle. This is not 2008. Things are much different this time, and we'll have to ride this out and see where we are in the next couple of weeks. But for right now, it's one bank that got over their skis, doing some things that they shouldn't be doing and not doing the things that they needed to do. And it's a confidence issue as well right now.
Yeah.
So we'll see where things go from here.
All right, the VIX to which you're referring, this volatility index, of course, it had gotten pretty high, and a lot of people worried that we were going to go into something really bad and soon, and it would be big. Still, most bank stocks, regional bank stocks, were selling off today, as you know, so there's still certainly volatility in those shares, and we're seeing a lot of customers from these institutions who they're fine, but they want the protection of a bigger bank. I'm wondering if that puts unintended pressure on these very banks we hope to see stabilize.
Yeah, it does. They're getting more pressure because they're going to have more profit and more income. Bank of America made $26 billion pure profit in 2022, $31 billion in 2021. So these guys have this huge net interest profit opportunity with all of these deposits if they just treat the money right, which is not hard to do if you're a professional banker. So I want to remind people, we are 480% above the 2009 low from the financial crisis, and we're still 80% above the COVID low. So as far as what the markets are telling us, COVID at 27, the VIX at 27 is a far cry from the $90, $100 level that we had in COVID in 2009.
What about investor confidence? I mean, you and I both were through the meltdown, and I do remember that, cooler heads did not prevail. Now, what was happening is a sell-off in one area led to sell-offs in other areas and other stocks, and they were all free-falling. And if you think about it, that, Alan, was the currency for their lifeblood and their survival, and it was melting away, hence the term meltdown. Do you see anything like that could potentially happen? Not logically, but just out of a fear of a bank run, a financial stock run?
Well, money has to move, and where's it going to move? Last week, it moved out of SVB and into the big banks. So money wasn't made or lost. When you really look at it, it just migrated, so to speak, to other opportunities. 2009 was so much different with the toxic assets that had no value and no prices to even put on a balance sheet. The balance sheets now, corporations have made record profits. They're at 50-year highs as far as profitability. So the balance sheets are so strong. And every other fundamental measure right now, we've got inflation, as the last guest was talking about, dropping pretty rapidly. Rates remain low. Oil prices are low. Unemployment is virtually none. So, right now, there are no other headwinds against this.
A 10-year note at around 3.40%. I only mention that because so many borrowing rates, including mortgage and home equity loan rates, car rates, are pegged to it. And that thing was over 4% a little more than 10 days ago. What do you make of that?
Right. So I'm gonna argue here that the Fed is getting its exact intended result. You may not like the way they got here. We're almost done, but they're getting the intended result. They wanted to knock some prices down. We've done that. And if you look at the big picture, the S&P, the market is still stabilized. Right. We're a good deal off the lows, 10% off the lows, and we're hanging around this 4,000 level. 4,000 compared to 666 in 2009. There's a big difference.
Yeah, I do remember that 666 thing. It's stuck in my head for a variety of reasons. Kind of like an exorcist thing. All right, Alan Nuckman, thank you, my friend, very much. Alan Nuckman, a calm force in these crazy markets. But these are crazy times, aren't they? And there is division as to how to handle these and address what has to be done. Not just